Hey guys, what's good? So in this video, I'm going to be teaching or showing you guys something very educative and practical, especially for beginners who cannot read or know the daily bias. It is also applicable to everyone because there are some days when it becomes very hard to read the daily bias, maybe due to high impact news drivers, even though you have a long-term weekly bias. So yeah, on days like this, you can trade against your bias and still be profitable. But on two important occasions, you have to know where and when your entry and exit will be very important. And with this, let's get started. So this was a trade I took on February 23rd on GBPUSD. Same day I took the trade on my previous video on US 500 if you've seen it. So this particular one is very educative, that's why I have to still upload it. So I advise you to take your time on this one. So looking at the chart, you see our still bearish here even though we have two equal highs as buy side because I had a market structure showing bearishness. So I wasn't expecting price to go above my intermediate term high. An intermediate term high is when price rebalances an imbalance and doesn't go above the long term high. It also have a short term high to the left of it and short term high to the right of it. This high here can also be called an intermediate term high because it rebalances an imbalance. And notice it didn't go above the previous intermediate term high, just like the previous intermediate term high did not go above the long term high. So this is a market structure showing bearishness. But looking at the 1 hour time frame, you see this displacement higher looking like a breakup structure with a fair value gap. So days like this becomes very hard to read the bias, and it is always highly manipulative moving sideways because the 15-minute time frame had the market structure showing bullishness for that day even though the week had been bearish. But if you notice something up here, each high formed did not go above the previous high. We kept having lower highs and lower lows showing weakness. So if you be trading against the bias, you want to take profit from a recent short-term high formed. So with this foundation on this, let's quickly move on to the fun part. There was a high impact news driver on this day, the PC stuff, and this 1 minute time frame, you see that the market took out buy stops and sell stops. Just like I said earlier, it becomes hard to read bias with this, so it's best to wait until after the equities open. But this trade I took was before the equities open because I had a clear setup. Keep your focus on these lows formed after the news took out short-term sell side. The new short-term lows formed did not go below the previous lows. So at this point, I was convinced that if I get a setup with a breakup structure and fair value gap, I could trade against the bias to take profits at this high formed by the news driver, just like I did here. But that confirmation is not really enough because we are trading against the bias, and the market is very volatile at this point. So using these higher lows, your stop loss will be below the low formed by the news driver or below the 15-minute fair value gap just to be safe. And that's where I kept my stop loss. So while everything seemed to be going fine, this sudden drop with these two down close candles happened. But the good thing about it is that the swing low form did not still go below the previous lows, and also the down close candles will act like another block later on. And then these higher lows forming, and we then got our displacement higher with these two fair value gaps and that other block. So this is like an extra confirmation while trading against the bias to take profits at that recent swing high as buy side that was formed by the news driver. I made a second entry inside that fair value gap. Let's zoom in so you clearly see the other block, the fair value gap, and how price respects everything. So there was two fair value gaps, but I had to pull the rectangle from the middle of the top fair value gap to the lower one because of the other block. That's how I do my stuff. But all this movement happened before the equities opened, and 9:30 volatility always give a fake move, the Judas swing. But I was only looking at the 1 minute time frame, and it's best to watch the 15-minute candle during the equities open. And at this point, I already made a second entry after I marked that down close candle as another block, and that is why my other block was violated. It was later I then realized it was 9:30 the equities open, and I had to hold it because it will respect the other block with the fair value gap where I made my first entry. So the return to the other block gave an ideal entry against the daily bias. So at this point, it kept accumulating long positions on the other block. So I was then waiting for a strong projection upwards, just like you see the text on the screen. I was typing that live while trading, and then it happened as expected. And since you're trading against the daily bias, the most significant swing high is where you close positions, just like this one formed by the news driver. But I moved my take profit a little bit higher, thinking it would get there. Guess I was just being greedy, and then it reversed after taking out buy side. So when I switched to a 5 minute time frame, I didn't realize the sell setup was forming because the bias already is bearish. And that's why I said earlier that you need to know where and when your entry and exit to be when doing this. And that's how I closed the trade here with this little profit. And later, this was what both US 500 and GBPUSD look like. I was trading both pairs at the same time. So yeah, that's how the day went. So hoping you find this insightful. Do well to subscribe, leave a comment saying your thoughts on this, and like to. And until I see you next time, be safe.